Hello everyone and welcome back. My name is Greg Furman, market analyst here at TraderPlanet.com, and this is the Forex market outlook for the week of February the 1st, 2010. Now we're going to start this week's presentation where we usually do with the US dollar index. We can see here that I've been calling this move up since essentially the beginning of December. We've had some pullbacks, but we've got a good strong move here with a very strong close at 79.46. Now to outline our key levels of support, we have the predicted 3-day at 79.03, 78.53 on the predicted 8-day exponential moving average from Vantage Point, and the predicted 18-day moving average at 78.04. Only a sustained break of the 78.04 will see this index reverse, and I see that very unlikely at the current time. We can see back here in the beginning of January, we had the 3-day crossing over both the predicted 8-day and the 18-day. However, the triple EMA crossover would not confirm a sell signal on the US dollar index, subsequently moving considerably higher. Now, a point of interest here is that we are starting to touch on this overbought territory with the predicted TSI. The predicted RSI is also overbought. However, the predicted MACD is actually just going over the zero line now, suggesting that we have plenty of room to extend here. So keeping that in mind, going into this week's presentation, of course, the US dollar index is a very important indicator for us to monitor. So with that said, now I'm going to go into some of the other currency futures to see how they're making out. I suspect not quite as well as the US dollar. Euro FX, the Euro futures contracts, we can see that we had a crossover that took place just about the time that the US dollar the index started to reverse higher from its corrective move lower. The Euro FX futures contracts now come in 142.08 is a key resistance, 140.74 predicted 8-day, which is a second level of resistance, and the first level of resistance 139.57, which is likely to contain the euro in the short term. So it looks like we have further downside potential for the euro. Things certainly not looking good over there right now. Predicted RSI, it is in oversold territory. Predicted MACD again is not. Predicted TSI, the true strength indicator from Vantage Point, however, definitely a concern as it moves well below the oversold area of -20. So we'll be monitoring the euro very closely also, but I suspect we're going to see somewhat of a corrective move. I'm just not sure when. So now one that's again a point of interest to us is of course the yen futures. Last week I had suggested that the yen would strengthen. That did happen. Where it's going to go from here is left to be seen as the US dollar continues to gain strength. But for now, we can see that these levels, the predicted 3, 8, and 18-day moving averages from Vantage Point, continue to hold. So it looks like we have further yen strength ahead, but we'll have to. The yen is a very difficult pair to trade, or even on the currency future side. But we'll keep an eye on it. Now, looking at the crude oil contracts, we can see that this is moving aggressively lower. We're now into below the $72. We've closed at 71.46. Now, my concern here is we can see that the 75.21 is the predicted 18-day moving average, and the critical level of resistance in this particular case. Now, the market has moved aggressively away from that, and the further the market moves away from this area, the more likely it is it's going to return back to it. So I'm be very cautious with the crude oil contracts. It's going to be a leading indicator, but then again, I should say this is where we could see the US dollar soften a little bit if the commodities start to correct back higher, which I do anticipate that's going to happen. But again, we'll have to monitor that throughout the week. But for now, we are probably going to see further weakness in the crude oil contracts, but it's also likely to stabilize around that $70 a barrel. Now, we're also going to look at, as we always do, we're going to look at gold, see what's happening there. We can see that we have the crossover from Vantage Point that just took place actually about a week and a half ago. Very good move on this. It's still moving lower. Key levels to watch: 1106.80, 1094.90, and 1085. Markets closed at 1083, so only a sustained break of 1106.80 will see gold contracts reverse long. Now, we can see here, but it's very good to look at these chart patterns because we can see that the crossover, regardless of which way it's going, is not lasting for a very long period of time. usually 3 weeks to a month, and then it starts reversing back the other way. So keeping that in mind, what I suspect will happen is we'll have a couple more down days on gold, and then we're going to start moving higher. So those are the main futures that are driving the markets. Now, again, this week I'm just going to add one more here so we can have a quick look at it, which is, of course, is the S&P 500. Now, the equities play a big part in the currency trading, of course, still. So we can see that we have this crossover that's taken place from the vantage point, very accurately calling that move lower. Now, it's been a very, very long time since we've actually had a confirmed sell signal on the equity markets. Last time we had one, you can see right here, was all the way back in the beginning of November. So, essentially we've had 3 months of an up move. This suggests that the equities have room to extend much, much lower. So we're going to see how this plays out, but for now we've definitely got to sell on the equities, and that's a further boost to the US dollar. However, it's also a further boost to the Japanese yen, so we have to again keep that into consideration if we're doing counter trend positions, contrarian positions on the yen. The yen crosses, probably not a great idea at this particular junction, but we'll see how that plays out this week. But for now, again, this confirms, by looking at this signal on the S&P 500, it's not only confirming US dollar strength, but it's also confirming yen strength. Now, what we're going to do now is we're going to go into the individual currency pairs. We're going to start, as we usually do here, with the US-Canadian pair. Now, the US-Canada pair, we're touching here with the predicted TSI is touching on overbought levels. We can see by this chart that we've had a significant amount of resistance in the 107.50 area and major resistance at 108.50 that has not been cleared for a great number of months. So the reality is here we have a very strong move from vantage point. It's a fairly fresh crossover that just took place about the beginning of this month, but unfortunately I don't feel that this rally is likely to continue. Now, I absolutely could be wrong on this, but what I'm seeing here is we're into overbought territory, and if this move is going to continue, I believe we will first move back to the 105 area, and then at 105.05, this area will need to hold, and then we will go higher. But I don't believe that it has the momentum to push through that 108.55 area currently, and I'm not even sure that it's going to be able to push, to be perfectly honest, that it's going to be able to push through the 107.50 area. So again, we'll be keeping a close a close eye on that. But for now, counter trend shorts on US Canada is certainly something that can be considered, but we also want to use the consider buying on dips back to this 105